As this new year approaches, many older Americans are trying to understand what their Social Security income may look like and how upcoming changes could affect their financial stability. Discussions about a possible January 2026 payment that could reach as high as $5,150 have created both curiosity and confusion. The purpose of this explanation is to provide calm, clear guidance so that seniors know exactly what this number represents, who it might apply to, and how to interpret the information without stress or unrealistic expectations. This is not about dramatic claims or rumors. It is about understanding how Social Security actually works so that every senior can make steady, informed decisions about the year ahead. Over the last several months, headlines have circulated about a surprisingly large Social Security payment expected early in the year. The figure of $5,150 stands out because the average monthly retirement benefit is far lower. What is most important to understand from the very beginning is that Social Security does not send one standard amount to everyone. Benefits are individualized and based on a person's work history, lifetime earnings, and the age at which they claimed benefits. In some cases, additional benefit types can be combined into a single deposit, making a monthly payment appear unusually large. The number being discussed is not a new national bonus or universal payout. Instead, it reflects the upper range of what certain beneficiaries may receive when multiple factors align during the same month. Social Security retirement payments are calculated using a person's highest 35 years of earnings. Those who worked consistently in high-earning positions and paid the maximum payroll taxes throughout their career often qualify for much larger benefits than someone whose earnings fluctuated or remained moderate. On top of this, seniors who waited beyond their full retirement age to claim benefits receive delayed retirement credits. These credits increase monthly payments permanently, and they continue to grow until age 70. Someone who reached age 70 before claiming may see a significantly boosted benefit amount by the time January 2026 arrives. For individuals with long, high-earning careers combined with delayed claiming, monthly payments can reach well above $4,000 before any other adjustments are added. Cost of living adjustments, known as COLAs, are applied every year to keep benefits aligned with inflation. Over time, these increases compound. A person with a strong base benefit who also receives yearly COLAs can see their monthly amount grow by several $100s compared to earlier years. By January 2026, benefits will include the adjustments from 2024 and 2025, which means some seniors will notice higher deposits than they received in the past. Another reason a January payment may be unusually large is retroactive pay. This occurs when Social Security owes someone money for previous months due to late applications, corrected records, or decisions made after appeals. When retroactive pay is included with a scheduled monthly benefit, the total deposit can look much larger than normal. In those specific months, a payment may approach or even exceed the $5,000 mark. However, this increase applies only once. Future monthly payments will return to the regular amount. Some seniors receive more than one type of federal benefit, and this can also affect the total amount they see in their bank account. A person may receive retirement benefits along with a spousal or survivor adjustment, or they may qualify for benefits based on disability or other federal programs. In some cases, veterans' benefits or certain government pensions may arrive around the same time as a Social Security deposit. Even though these programs are separate, the timing of the payments can create the impression of one large amount appearing all at once. This is one more reason the $5,150 figure sometimes appears in public discussions. Many people have misunderstood this number to mean that a special bonus or stimulus-style payment is being issued to every senior. At this time, there is no confirmed law or policy that introduces a nationwide one-time payment of that size. It is essential to be cautious of misleading claims and to focus on official information regarding benefit amounts. The figure represents the highest potential total for individuals whose income history, adjustments, and retroactive amounts combine into a single month's deposit. For those who receive Supplemental Security Income, or SSI, the situation is very different. SSI is a needs-based program that has strict income and resource limits. Monthly SSI payments are much smaller than Social Security retirement benefits, even with cost of living adjustments applied. Unless there is a rare retroactive correction, SSI recipients should not expect monthly totals anywhere near $5,000. Understanding which program you are enrolled in is one of the most important steps in managing your financial expectations. Payment timing is another area where confusion often occurs. Social Security payments are scheduled according to the beneficiary's birth date. If a scheduled payment day falls on a holiday or weekend, the deposit may arrive a few days earlier. When this happens near the end of December, people sometimes think they received an extra payment. In reality, the earlier deposit still represents the January benefit, not an additional month of income. Another detail seniors should be aware of is the role of Medicare premiums. Many retirees have their Medicare Part B premiums deducted automatically from their Social Security payments. If premium amounts change, or if corrections are applied, the net amount deposited can shift from month to month. In rare cases, a refunded premium or an adjustment may temporarily increase the total amount received, adding another reason why a particular month's payment could appear larger than usual. Taxes can also change the amount that arrives in a senior's bank account. Some people choose to have federal taxes withheld from their Social Security payments. If these withholding settings are altered or corrected, the net amount may rise. This does not mean the benefit itself increased, only that less was withheld. Seniors should regularly review their benefit statements to distinguish between gross and net amounts. As January 2026 approaches, seniors can prepare by reviewing their Social Security statements and understanding how their benefits are calculated. Knowing your benefit category, your lifetime earnings record, and whether you have any pending corrections or appeals can provide a clear picture of what to expect. It is wise to plan your monthly budget based on your usual benefit rather than on large numbers appearing in media discussions. If a higher than expected amount does arrive, it can be used responsibly once it is confirmed. For some individuals, especially those with long, high-earning careers who waited to claim benefits, larger payments in January are very possible. These people have built their benefits over decades, and delayed retirement credits significantly raise their monthly amounts. Others who may see higher deposits include those who recently had record corrections or appeals approved. When back pay is included, a single month's deposit can temporarily rise sharply before returning to normal levels. Survivors receiving spousal or widow benefits may also experience higher payments under certain circumstances. Survivor benefits can be based on the higher of two earnings records, and adjustments can create one-time payments that look unusually large. Combined benefits, including certain pensions or federal income tied to past service, may also create the impression of a very high monthly Social Security deposit, even though several separate payments simply arrived close together. For seniors unsure about their upcoming payments, the most reliable source of information is their own Social Security account, which shows detailed benefit amounts and payment history. Reviewing this information prevents misunderstandings and reduces anxiety caused by wide-ranging headlines. Budgeting remains an essential tool. It is safest to plan finances around stable, predictable income. If a larger lump sum appears due to retroactive adjustments, it can be used strategically, such as for medical expenses, emergency savings, or paying off overdue bills. Treating these larger amounts as one-time support helps avoid long-term planning disruptions. Healthcare expenses are another area where awareness can make a significant difference. Premiums, medication costs, and supplemental insurance rates can rise yearly. Even with increased Social Security benefits, rising healthcare expenses may reduce the net amount available. This is why understanding deductions is important. A senior may receive a higher gross benefit while noticing little change in the deposited amount because medical premiums increased at the same time. Tax planning is also helpful when dealing with larger or unexpected payments. Retroactive pay may change taxable income for the year in which it is received. Setting aside a portion of those funds can prevent difficulties during tax season. While not everyone pays taxes on Social Security, changes in total income should always be considered carefully. Another area of concern during times of rumor and speculation is scams. When large benefit amounts are mentioned publicly, scammers often attempt to contact seniors with false promises, claiming they can help unlock special payments or arrange early access to funds. Social Security will never call to request personal information, demand fees, or offer secret payments. Seniors should stay cautious and protect their personal details at all times. As the new year draws closer, staying grounded in accurate information becomes more important than ever. Social Security operates through established procedures, and major changes are always publicly announced, not hidden or delivered as surprises. The best approach is to review your own benefit information, stay alert to changes in deductions, and remain aware of how retroactive pay or record corrections may affect your deposit. In summary, the figure of $5,150 represents a possible deposit for a select group of beneficiaries whose circumstances combine to create a higher than usual payment in January 2026. It is not a universal payout or a guarantee for every senior. Understanding the calculation process, the role of delayed claiming, the effect of cost of living adjustments, and the impact of retroactive corrections allows seniors to navigate their finances with confidence. Moving into the year ahead, knowledge is the strongest financial tool available. Understanding your benefits helps ensure that every dollar supports your well-being, your stability, and your peace of mind as you continue through retirement.